Welcome to Markets Now. I'm Michelle Rook along with Matt Bennett with agmarket.net. We're seeing a lot of lower prices this morning with the exception of the hog market. And Matt, let's talk about grain setting back. We've had a little change in the weather forecast, but we also ran up into some major chart resistance in corn and beans yesterday, especially those 100-day moving averages in the corn market.
Yeah, I mean, we raised higher yesterday, went up on 100-day moving averages, and quite frankly, I mean, this rally has been quite strong. You've bounced off of the 490 area on D's corn to race all the way up, more than 60-cent move higher, and so it's just been one heck of a rally in here. And then I think people are stopping and looking. Forecasts are diverging. We know that. We've had all kinds of different thought processes on what's going to happen as far as weather's concerned. But, this morning it looked like the euro, which has been the drier option pretty much all the way through here. The euro is throwing some rain into parts of the Midwest. Now, it still looks like most of Iowa is going to stay dry, according to some of these forecast models. So you need to see some rain come in there. But seeing a fair amount of areas in the Corn Belt get rain, it's no secret that you're going to see the corn market struggle, especially given the fact that we've rallied due to dry forecasts.
You bet. Did we also see some hedge selling pressure yesterday when you got up to that 550 on D's corn and 1250 on beans?
Yeah, no doubt. You hear that all the time. Folks will say, "Hey, we've got hedge pressure," but I can assure you, Ag Markets partner JSS, essentially what they deal most in, is the cash grain business, working with folks that are in those businesses, and so they get a lot of phone calls. Hey, we need to hedge off 50,000 or whatever it might be, because producers are rewarding the rally, and so we got to be mindful that at this stage of the game, the only way you're going to see cash corn rally from here is going to be on the back of the entire corn complex rallying due to basis. I mean, it's very unlikely otherwise. I don't want to say it's the only reason, but Michelle, holding corn too long into the summer has not proven to be a great idea many years for producers. And so whenever you saw the market fall back yesterday and it was accompanied by widening of basis in many areas, that is not the sign that you're looking for, if you're the holder of cash corn. So be very mindful of that. I think getting down to gambling bushels is exactly what we need to be having a mindset of moving forward here.
Yeah, and these weather markets, these rallies can be fleeting at times, but do you think you say that we have had a nice move here, this nice rally? Has it been justified? Do you think we needed to put this much weather premium in from where we were at, and thinking about how much yield loss we've maybe incurred? It seems kind of early for this.
That is a great question, Michelle, but I guess ultimately the market doesn't have to explain why it does what it does. The thing is that we received the rally. Should we have gone up into this level? I mean, a lot of folks were clamoring for 575, 580. There's still some folks on my team that think that that's a possibility. And by all means, if you come in here with new maps and you take moisture out, I could see us closing 10, 15 higher on the day. So, should we have gone this much higher? Yeah, I mean, in all honesty, you come into the springtime, the funds built a pretty big short position in the month of May, which is not typical. And so there was no weather premium whatsoever. So not only did we not have weather premium, but the funds were short. And so I think the funds said, oh, no, maybe we got the cart ahead of the horse a little bit here. We're at least going to have to cover these shorts, before maybe they take some big long position. They want to cover shorts. And so that's exactly what has precipitated this rally. They had to liquidate a fair amount of contracts, to get back to even. And so depending on who you're looking at, whether they're what their position is as of today, it'd be very interesting. But the bottom line is I don't think the funds want to take a huge long or short position going into a 3-day weekend that could have such big implications.
No, I'm with you. And I was going to ask you about that. If it was because the funds were so short in the corn market, which is so unusual, that gave us that ammunition. But what about the soybeans? We know it's way too early for yield damage to occur in that market, even though, or in that crop, even though we have had drought expanding. So what's your thoughts there? This has been pushed somewhat by the soybean oil market. And, why is soybean oil so strong?
I mean, that's a really good question. And I've had a hard time figuring out why soybean oil is this strong. Veg oil prices overall have been strong. But whenever you're talking soybeans, the one thing I want to point out, just looking out my back door, we've done a fair amount of travel here over the last couple of weeks. seen a decent amount of roadside, and I would say beans have not grown. You're coming up on summer solstice here in the next 10 days, and so you want to see beans are flowering, right? And so that's what the goal is. Well, there's not much growth here, and so do we still have time for the bean crop? Of course. You stress a bean crop sometimes and it performs even better yet. But one thing I'm very concerned about is right here in the middle of June. Typically, our beans are taller than what they are today, and we certainly need to see some moisture get in here, give these beans a chance to grow. But I think that the bean crop could be a major issue as well if you can't turn it into a wholesale wetter type forecast. So bean market, nice little rally in here. I mean, let's face it, a couple 3 weeks, of just pretty rough markets before that. So it's nice to see last week that beans led the way higher. Are we going to see that again this week? It's tough to say, but we certainly hope we don't give it all back here on a day like today.
No doubt. It was a nice up week last week in the soybeans for sure. The wheat market lower this morning, just following corn and soybeans, do you think? Or are we starting to see a little harvest pressure in KC wheat? Or is this just that poor demand picture we keep talking about?
I think a little bit of everything. I think that a little bit of harvest and then demand. I mean, obviously, demand's not the greatest. Really, the only one of the three that demand has been strong as far as exports concerned, relatively speaking, has been soybeans. So wheat and corn certainly are nothing to write home about. So I think this wheat market, you could have kind of a rough go here coming up. Now, with that being said, I don't think the yields are going to be spectacular. There's a lot of areas that have been awfully dry, of course, at a time whenever you'd like to see a fair amount of moisture, be able to fill heads and whatnot. But bottom line is the wheat market just doesn't seem to be able to get any traction. And so do I want to trade wheat on the long or short side today? Neither. I can tell you that right now.
So some pressure creeping back into the cattle market. We saw that yesterday and came back nicely. But what's your thoughts about this cattle market? Are those key reversals going to hold here? And if we see a correction or a bigger correction, how much is it? Because you have such big discounts with the futures to the cash.
Yeah, I mean, the way I felt about the cattle market after you ran up higher last week, you got April pushing 190. And so, I mean, people start throwing around, where are we going to get to 200? Hey, you know what? At some point, I think that's a possibility, but it sure seems to me that we're going to have to take a bit of a breather in here. The market to be able to go on higher is going to have to kind of recuperate and get bulls excited once again. I think what does that at some point, if you heal up pastures, if you get healed up as far as moisture is concerned in the Western Corn Belt and start having talk about retaining heifers over the next few months, I do think that once you look up and see cattle on feed numbers even lower, I think that that could be one of those things that you could maybe precipitate a blow off top type situation and see even higher prices than what we're looking at today. But as far as a short term rally to make new highs for this move, I guess I'm not buying into that right now. I mean, as you know, I've been bullish cattle for quite some time. It's worked out fairly good. But if I was bullish right now, or if I was holding longs right now, I do believe that I would be taking a little bit of length off the table. I don't know that I see the incentive to be super friendly as far as the short term is concerned at this moment.
You got to believe there was some hedge pressure here recently that pressured the market as well. But if we get record cash, maybe all bets are off, you think? I mean,
Yeah, I mean, I think that the cash is what's going to have to do it. The
yeah,
thing that's scary to me moving forward is that what guys are paying for these feeders, and so feeders are
exactly.
so expensive, that you have to make the assumption that going out to, an April time frame that you are still going to be looking at a, 185 to 190 type price. Obviously, it's been nice to see that a little bit of the pressure has been taken off as far as corn prices are concerned. A lot of folks are assuming corn prices are going to continue to back off, which should help the feeder. But at the same time, I think a person has to be very mindful of what they've got in these cattle, because it's going to be a very expensive proposition to not only buy the feeders, but to get them out to fat weight.
And quickly, Hogs have had a nice recovery off the contract lows. You think we have much more upside potential, though?
No, not really. I mean, I hate to say that. I can't get super excited about hogs. I mean, those that have tried to play the long side of hogs typically lately have done it at the wrong time. And once you finally say, I'm just going to trade this from the short side, and then the market turns around and goes up $10. So I
I
don't know.
know.
I don't see hogs going up a whole lot more at this juncture. It's been a nice rally, though. I think the funds had to cover some shorts. I just don't know what would drive it significantly higher right now.
And finally, CPI yesterday showed the inflation is cooling off a bit. Does the Fed take a pause today?
Yeah, I think they do. I mean, that's what the market is expecting, but not 100% by any means. But I think the market is expecting that they're going to maybe take a month off from raising rates. I do think that it's the smart thing to do. Most of your indicators would lead you to believe there's no reason to continue to be aggressive. And so right now, I sure hope we see a pause. I think that'd be the best thing for the economy from my vantage point.
No doubt. Thanks so much for joining us, Matt Bennett with agmarket.net, and that's Markets Now.